You're listening to Real Facts on Real Estate with Sean Patrick Maloney.
That sounds good.
Welcome to episode 18, Condo Financing. I'm your host, Sean Patrick Maloney. This week I'm going to be talking condo financing with Chris Devon of Cross Country Mortgage. He's in the top 1% of all producing mortgage professionals throughout the country for the past 10 years and has 18 years in the industry. Also runs a radio talk show called Real Estate Talk Boston. You can find it on boston.com. He's always involved with all the different real estate communities. I'm happy to have him here today. Thanks for joining us today, Chris.
Thanks for having me, Sean. Appreciate the invite.
Not a problem. As you know, I have a Facebook group as well as a podcast running for Real Facts on Real Estate and really trying to provide the agents with a lot of value. So today I want to dive deep into the subjects of condominiums and how they're different and how an agent can prevent themselves from running into some of the pitfalls involved with them, and also how they can capitalize off this enormous part of the industry. Let's open it up with talking about how condo life is different, and we can use this as an open platform, whatever works, and we can just talk about the overall idea of how it's different.
Absolutely. I think it's an important topic for an agent to approach immediately with their client when they're talking about buying a condo. It's an awesome opportunity for a lot of people, especially if you don't want to take care of a yard and the typical maintenance that comes with home ownership. But you definitely have to make sure that you are fit for condo lending. And I'll tell you, a trend that's been a lot more common in recent years is empty nesting and downsizing into the city. A lot of people moving from the suburbs into the city or even within their communities to condos. I recently came across a situation, a couple that had been in their home for 30 plus years in Milton decided to look at a condo, actually put a deposit down on a new construction condo a couple towns over from where they've been for the past 30 years. And after a couple months, realized that they didn't want to share a wall with somebody. It's something that they really hadn't thought about. And all of a sudden it came to them. I don't know if this is what we're really looking for. So if you're going to go down that path of condo living, which, like I said, is awesome option for a lot of people, you just want to make sure that you're thinking it through. And in some cases, you're okay with sharing walls with somebody else.
Yeah, I think that's a great point because I know personally my mother, I moved her into a place that was supposedly a retirement home, and shortly thereafter she planted some flowers that she got a violation notice for, and she got a violation notice for one of her relatives stopping by and parking the car in the street, and quickly she realized that condo life is different. So I do think it's a great option for a lot of people, and as you sold it, it's I don't want to shovel snow, I don't want to clean the gutters, I don't want to deal with the lawn type crowd. But you do have to remember, coming from single family, that you're used to being able to be the law. And that's right. A big part of it, as well as like we had talked about party walls and sharing a wall with a neighbor. That can be something that can be a little disruptive to life if you like to listen to Michael Jackson at 3 o'clock in the morning and you think that that's okay. Your neighbor might not exactly like that, and you might find a notice in your mailbox asking you to attend the next meeting.
Right. Or if you have friends over for the Pats game on Sunday and like to get a little rowdy, have a few cocktails, or like you said, just listening to music. I don't know. Some people might dance, and if you have people above or below, that can impact them. So it's definitely stuff you have to think about. Another common issue is pets, right?
Yeah.
A lot of people think that they want to go to a condo. They have a pet that they can't part with, and realize that their options might be limited. So once again, just another thing to think about.
Yeah, and then obviously there's a lot of pros to it. The ability to look out front and get home from work and have the landscape done. I mean, that's amazing to just get out of work and to be done. I mean, I was a homeowner for 10 years. I'm currently a renter because I'm a little bit of a transient, liking to travel around and fly and not deal with it. And there's nothing better than when I just call the landlord about problems and I don't have to deal with them. And that's one thing that condos do allow you to do, is to be in the back seat and to only worry about the interior, turn the key, lock the door, turn the heat down, head out on vacation and get back, and you have a plowed driveway when you come back in the middle of the winter or anything like that. So certainly a lot of pros to it. Obviously, the other one is too, a lot of times you get a lot more for your money overall than you do when you're doing single family home ownership. As far as sometimes you might even have a common gym or other things like that. So sometimes you got to look at those as the benefits as well.
The amenities that are in the city right now at these new developments are mind-blowing. I don't know if you've seen them. I mean, they have full-service gyms, dog walkers, yoga studios, fireside chats with, speakers that come in. It's really kind of endless with the amenities that they're throwing into these new buildings.
So let's talk about the purchase side of things. What's different about qualifying for a condo versus a single family when it comes to getting a loan? What's the differences?
There are a few different things. I mean, what I think a lot of people, especially homeowners, don't realize, and agents need to stress this to them, is not only does the buyer have to get approved, but the condo has to get approved as well. Okay. There's a process to that. Typically you want to be able to collect upfront the condo docs, the bylaws for the development, the budget. There's a full questionnaire, a partial questionnaire, depending on the qualifications of the bar and what they're putting down. But the questionnaire needs to be filled out, and a copy of the master insurance. So, there is a process to collecting this information. The lender's going to want to check into owner occupancy. Is there commercial space in the development? That has a big impact. Condo fees being late. If it's an established association, if more than 10% of the homeowners are behind in their condo fees, that's an issue. So, I mean, there's a lot of different moving parts to it.
And overall, obviously, the other one I think that's really important for agents to understand is when equating out a pre-approval and you're dealing with a condo, what changes from single family over to condo?
Well, you have the homeowners association fee, and we come across this all the time, Sean, where somebody says that they're pre-approved or got pre-approved for a bank for, let's say, $400,000. Okay. And they think that pre-approval is universal. A lot of people try to push themselves to the absolute limit. There are lenders that do that. I don't believe in it. I think it's all about communicating with the buyer, letting them understand what their middle of the bat scenario is versus the higher side. But when you're talking about buying a condo and a single family, you have to make sure that they understand that it is two different things. On the home ownership side, you're going to have principal, interest, taxes, insurance, potentially PMI, right? On the condo side, you're not going to necessarily have as high of a homeowner's insurance. You might have an HO6 policy. That's a separate topic, but bottom line is insurance payments not going to be as high. However, you are going to have that HOA fee. Now, in some multifamily conversions in the Boston area, that homeowners association fee might be $100. But on some buildings, especially the full service buildings, I'm doing one right now in Harbor Towers in the city, and it's $1,250. It's almost a mortgage payment by itself, right? So that stuff goes into the qualifying of the buyer. And back to my original comment, you might have a $400,000 home and a $400,000 condo, and the buyer might not qualify for that $400,000 condo because of the HOA fee. It's something that you definitely have to look out for.
So it seems like during the process of getting ready to even offer on a condo, you may want to run it by your mortgage professional and just keep them in the loop during the process. Or if they are going condo, speak about it early and figure out different scenarios, run some numbers at each different condo fee.
I highly recommend that you connect with your lender and run any scenario that you are thinking about making an offer on by your agent and your lender. Very important, because the last thing you want to do is submit a pre-approval and not have all your ducks in a row, realizing that, oh, guess what? This condo has a higher condo fee. I don't qualify, and be set up for major disappointment. So we say to all of our clients, if you see a property and you're thinking about making an offer, send us a link. Let us run the numbers. It's going to help you in the long run for sure.
And then obviously on the other side, guys, if you're working with a seller and you're going to be accepting an offer and you get a pre-approval that just reads $400,000, you better be careful before you take the property off the market, because as you know, you take the property off the market and then you find out that they're not actually pre-approved and you come back on. No one ever blames the buyer. Everyone always blames the seller, and there must be something wrong with the house. We all know it. It's the worst thing ever when you have a buyer come in, it's not qualified, and you as the agent make the mistake of accepting that because of the fact that the pre-approval reads $400 and you didn't think about the condo fee. Don't be that person and don't get yourself in that situation. Also, always keep in mind with all things, whether condo or single family, you have to keep in mind that taxes are different in every town, and the tax fluctuations in some towns are enormous. Some of the most expensive towns don't even really make sense to why they're the most expensive towns. I saw the list recently, and there's a lot of these low number of people towns that have massive amounts of expenses, and then the higher number of people towns actually having lower expenses. Most of the most expensive are out in western Massachusetts, actually.
Interesting. I didn't even realize that.
Yeah, they put out the top list recently, and I was surprised, but what it made sense was the huge land area and very low population. So therefore, those people are paying to run the entire town for very few people, which is obviously going to increase their rate. But anyways, just a side note, always just make sure when you're accepting the pre-approval on the seller side, you're checking in on everything. And I personally reach out to the mortgage professional on the other side and always just make sure that the person is truly qualified, especially if they come to me with one of those letters where I've never even heard of the company and it looks like somebody made it on Microsoft Word, because I'm a little bit nervous about those ones.
Yep, and they exist, believe it or not.
Next question I had for you, Chris, is can you buy a condo with FHA or VA loan?
You can, for sure. What you want to make sure of as an agent, if you're going to show a condo to your client, is that the project is FHA or VA approved. You can do that by going on to HUD.gov. They have a section where you can actually go in, put in a zip code. It'll show you what projects are approved, or you can put in the project name specifically. If the project is not approved, there is a process to it, and it can take up to or even more than 60 days. It's a labor-intensive process, typically that falls on the agent, or an attorney gets involved as well. Definitely can be pulled off, but you want to make sure that the buyer understands that if you're going to go down the path, if you definitely want to make an offer, you have to realize that the seller has to understand that this process could take time. And it's something that if you're on the sell side, you have a project that you're going to be listing, get ahead of the game. Open up your pool of buyers by going out, doing your due diligence, get that project FHA, VA approved. Is going to open it up to that many more buyers.
Yeah, I actually did a project recently where, unfortunately, the condo association was not willing to work with us on the process, but what they were willing to do was open up their attorney to us and have our attorney run the process and them have the minimal expense. But what it meant to my seller was another $10,000 compared to what the offer was. So they spent $1,800 to get 10, which means they netted 82, which was perfectly fine to them. But one of the things you can do as an agent is the next time that a board meeting's coming up and you're going to be listing something is go in and be the politician and pitch to them. Do you understand how many more buyers are out there and available if you go into FHA and VA? And the other thing you can do, not that it is the wrong way or whatever, but sometimes you can kind of play the fiddle and say, do you not want to take care of America's veterans? You can put it on them that if they're not VA approved, they're actually denying people who served this country, which it's actually a true statement. So you don't have to feel bad about doing it, because there are a lot of aging people coming from the Vietnam War and all these different, we had the Desert Storm and a few others where we have a lot of people that are looking to get into condos that are being kind of basically wrongfully discriminated against because they're not willing to VA approval them. I'm going to tell you the VA approval is a huge one, and also there's 0% down loans. These people are spending big money and they're buying very nice places, so don't rule any type of place out. You should definitely get it approved.
Completely agree. And what's exciting, Sean, is that the Federal Housing Authority has come out and said recently that they're going to try to create more flexible guidelines, potentially bringing the spot approval back where you can get one unit approved within a complex if the whole complex is not approved. Allow up to 45% commercial space, which would be a big deal if you're buying a unit that might have a restaurant in it or some sort of business, and that takes up a decent amount of the overall building. That would be allowed. So exciting stuff potentially coming down the pike, hopefully sooner than later.
Yeah, I know I read an article about it recently, and it was just going over the aging housing supply in the U.S. and the fact that when it comes to low-income housing, there's a lack of availability, and then they directly correlated the lack of availability with low-income housing and the fact that most of the lower-income condos, which are the most affordable housing, don't qualify within FHA and VA guidelines. And I know I recently did one where it was above a commercial building, and we didn't end up getting the condo because we took so long. We talked to 5 different banks and companies about this, and no one could touch it. The only person who could touch it was a portfolio lend, but that meant that the person had to come up instead of 3.5 down to 10.1, which just totally put it out of their category. And let's be honest, how many people that are buying affordable housing have 10% or 20% to put down? It's just totally unrealistic.
Right. Agreed.
So
sure.
This available option, hopefully it's coming down the pipeline soon, because I know it's going to actually create a lot of available opportunity for both sellers and buyers. So make sure as agents you're paying attention to that, because when this opens up, it's kind of going to be the Wild West. They're going to have a lot of opportunities where it's like gold prospecting. First one there, knowing that it's going to be available, you're going to be able to go out and advertise to sellers and buyers alike. We have new options for you. You might not have been able to purchase before, but now you can with only 3.5 down.
It's a great way to market a property.
So, Chris, why do some lenders have an issue with new developments?
New developments have more risk involved, bottom line, especially if they're built in phases, okay? The lender's going to really kind of dig into how it's going to be built out, the history of the builder, because you could have a development that is multiple phases. The builder gets through phase 2 and goes belly up. It's happened. And in that case, now you have a development that's not marketable, right? So the lenders are going to do their due diligence to make sure that everything is healthy. The budget is healthy. You know, the bylaws and the condo docs are in place. A lot of lenders are going to look for 51% of the units to be under contract or sold before they close. Not all lenders. We actually have a product with a 0% pre-sale product where we can be the first unit to close in a development, but that is not common in the market. A lot of banks, especially the big banks, are going to look for 51% to be under agreement or sold. Good fact for an agent to know.
And I hate to put them under the bus here, but I can say that contractors do themselves no favor in this thing. It's far too often that contractors say they're going to do something, and then once they start getting some sold units, the whole entire plan changes. So I'm sure a lot of the reservations by the lenders and banks is due to the fact that it's not their first rodeo, and they've seen where they say they're going to do X, Y, and Z, and what comes out is P, Q, and R. And right. It's really not the same. And when it comes to lending, you need to know what you're putting money on so that you need to know if it is the time where the person does not make the payment and you do have to go through the unfortunate phase of foreclosure, that you're going to be able to sell the unit that you have for the money that you've vested into that unit.
I mean, think about what happened down in Florida almost 10 years ago now, Miami. Right? They had buildings that were just empty, no lights on. For banks that had lent in those buildings, there were only a couple units sold. I mean, that's...
Yeah, and they were in the awkward predicament of you have people living in a building that you need to foreclose on, but they legally purchased the property and they're paying their bills. And how do you kick them out? And the whole entire process, it just can become really ugly. So it's something that obviously not as common up here because we don't do quite as many massive development type of situations, and we're not as quick to just, create a town out of what was once a desert, basically.
Right. From the lending side, I love when the agents are able to help explain the process and also the rate environment for condos. If you're going into a condo purchase, depending on your loan to value and your down payment, they're going to have to deal with a slightly higher interest rate. Nothing crazy, but depending on the loan to value, a 20% down payment is going to have a different rate than a 10 and maybe even a 5% down. So people have to understand that because they just go to bankrate.com and they see a 30-year fixed at, making up a number, but 4%, and then they go to buy a condo 5% down, and here their rate is 4.375 or 4.5. They don't understand why. It's because condos have that extra level of risk that we just talked about, and that ultimately impacts the buyer's situation.
So obviously we can go on for days about condos, but I'm going to finish it up with one other question. It's a common question. The word special assessment, for those who don't know what it means, it's when you have a project that needs to be done that's not covered within the condo fees, and suddenly you have a payment due. Sometimes they're willing to finance them out. Sometimes they try to call them to effect right away. Does this affect the ability of a lender to lend on a property if there's a known special assessment upcoming, as well as either currently on the docket or upcoming?
Great question. Actually working on a scenario right now, I will use it as an example. So we're working in a building in downtown Boston. There's a huge assessment for an upgrade to the building that's been around for over 20 years. And ultimately, depending on the unit, the homeowner is taking on an assessment somewhere between $18,000 and like $36,000. Okay. It's a big number. So they have options. They can either pay it off in one lump sum. They can take out a loan within their mortgage or cash out refinance or home equity line to pay for it, or they can take a loan from a bank that's tied to the association doing the project. Now, if that is the case and they are looking to sell the property, it can either be dealt with where the seller has to pay it off themselves. They're responsible for it, and that happens often. If that is not the case and they're going to push it off to the buyer, then that payment has to be considered in the overall debt to income ratio. Okay. So if, let's say, unit 22C in this building is selling and they have a $30,000 loan and a $685 payment over the next 5 years, and the buyer is taking on that responsibility per the contract, that has to go into their debt to income ratio.
So that could severely undermine the value if you had Unit A and Unit B, one with a $685 payment per month for the assessment, and the other one actually paid off the overall assessment there. You could actually have two of them be at totally different values, because $685, isn't that about roughly around somewhere between 70 and 120,000 on the lend side?
Right. No, it's huge, which honestly, in most cases you see the seller pay it off, but occasionally it comes up for whatever reason. I don't know if it's loan to value on the sell side or there's no other units up for sale in a specific building and the seller's passing it off to the buyer, but it can be done either way. And ideally, if you're a seller, you're going to make it that much more attractive if you're paying that off.
So all you sellers agents out there, just keep that in mind. You know, one of the things we always have is when we're selling a property, the person wants the most money and they want to shove all the bad terms onto the buyer. But educating them on the fact that this is actually going to affect the pre-approval and could possibly even knock out potential buyers, this is something you really want to bring up to them. Well, thanks for coming in today, Chris. I really appreciate you on the show. It's always good to have a professional that really knows what they're talking about in the mortgage world. If somebody was looking to get a hold of you, where would be the best spot to get you?
I'll keep it simple. ChrisDevin.com, ChrisDevin.com. More than happy to help, guys. Thank you for having me, Sean.
And can you remind me again, where exactly would they find the Real Talk Boston show?
On Boston.com in the real estate section.
Awesome. Well, thanks again, Chris. I really enjoyed having you in here today. I look forward to having you in the future to talk some more subjects, and have a great week. Remember, everybody, to follow us on the podcast, as well as if you are new to it, you can go over to Facebook and join the group. It's Real Facts on Real Estate. We keep the name universal across everything. If you have any comments, suggestions, or future episodes you'd like to see, feel free to reach out to me direct through PM, DM, email, text, whatever works best for you. Look forward to talking to you next week. Have a great day.